Well, today I'm going to show you how to reconcile that financial activity, how to actually reconcile your books on a monthly basis in 3 simple steps so you can stay on top of your money, honey. You an entrepreneur, I got what you need. Hey there, my loves. Welcome back to CPTV. I'm CP, and you are in the place for aspiring and growing entrepreneurs who want to turn their passions into businesses and their businesses into lifetime freedom. If that sounds good to you, then go ahead and subscribe, because every single Tuesday, I am giving you the training on the step-by-step business processes, techniques, tips, and tools that you can implement immediately into your entrepreneurial journey and life so that you can get to that level of freedom in entrepreneurship that you so deserve and desire. So you heard me. If that sounds like your place, go ahead, hit that subscribe button and click that bell so you don't miss any of it. And of course, if you like it, then show me. Smash that like button and tell me what questions you have for me, what information you want in the comments below, because I do read every single answer and I try to answer every single question, and I try to answer all of them. So if you don't believe me, then try it. Leave a comment and you'll see. So a little over a year ago, I did a video on how to set up your business finances in 5 easy steps. If you haven't seen that one, you have to check it out, because it's perfect if you need to get your financial shit together in your business, boo. I'm going to go ahead and link to it right here as well. And since doing that video, I get so many questions and requests on how to actually reconcile your business finances and books. So last week in episode 7, we discussed getting your business funding started. And I told you about the importance of having and tracking financial activity in your business. Well, today I'm going to show you how to reconcile that financial activity, how to actually reconcile your books on a monthly basis in 3 simple steps so you can stay on top of your money, honey. So let's get to work. First, let me start by saying this very important thing. Reconciling your monthly business accounts is a task that many entrepreneurs, including yours truly, loathe. I mean, hate. I mean, despise.
You selfish, you arrogant, and so stupid.
Yeah, whatever.
And we tend to avoid things that we despise. But let me reaffirm the absolute 100% critical nature of you taking a look at your books every single month to make sure that everything is good to go. Period. Now, I've gotten to a point in my businesses where I outsource this function. I have someone else do it. And as you grow your business, this will probably be one of the many tasks in your business as CEO that you outsource. Most likely it will be the first task because it ain't awesome, all right? At least for me. And I am a numbers girl. Some might even call me a bit of a nerd. Let's just say my grades in high school and college were evident of my crazy, overachieving, perfectionist state of mind. And I was ecstatic when I got a C in my college accounting classes. A C, y'all. That wasn't me, okay? It was just not something that I could force myself to love. And because of that, I realized that if I ever had my own business, accounting was not going to be something I wanted to do in that business. But, of course, once I became that CEO, I realized how important it was for me to actively be involved in my business accounting processes and procedures. And that includes my monthly financial review and reconciliation process. So, my point is this, my love. Even when you decide to outsource, you still need to be involved in the process. The fastest way for somebody to embezzle some of your money, create some fraud in your business, or do something shady to your money is when you aren't keeping an eye on it, all right? So trust me, I have been there, and maybe one day I'll go into more detail about that. But right now, I'm not trying to unpack all that with you. Okay? Not right now.
Tell me if you want me to.
No, not yet. Moving on. So, anyway, make sure that no matter how big you get or how much you hate it, review and reconcile your books regularly. Now, let's talk about what you need to do to get that done. Step number 1, schedule time to get it done. Block your schedule. For me, I like to make sure that I've blocked off, and typically Fridays are those days around the 15th of every month. That way I'm 2 weeks into the month and I can really get a good snapshot on what happened the month before. I actually have it blocked off of my schedule, and it's an automatic appointment, and I set aside 2 to 3 hours just so that I'm not rushing through numbers, so that I can jot down any questions and I can actually go in and review and reconcile. Now when I'm doing it, I'm double checking my outsourced partner's work. But when I was doing it myself, that was the time that I would actually log into my financial software, but I'm going to get more into that in steps 2 and 3, and do the actual review and reconciliation. So it is really, really important, if you can't wrap your mind around how to remember to do it, to just block your schedule. It is a function in your business that you have to do, and that's the best way to do it. Every single month around the 15th on the Friday, I know I'm going to be spending 2 to 4 hours in my knee deep in my business financials. And I recommend that you do the exact same thing. It's the only way that you're going to make sure you have the time set aside to actually get this all important task done. Step number 2, go into your financial software and review and categorize all of your transactions. Now, if you've missed my previous trainings on financial software or setting up your financial structure, I'm going to go ahead and link to that video right here, right now, because I've already done a video on what a financial structure should include, and that includes connecting financial software. I currently use QuickBooks, and I usually do recommend QuickBooks to most people that I work with, especially my coachees and students. And when I say log into your software, you're in essence going to go into your QuickBooks account, go to your initial dashboard, and as long as you have your account connected to your bank, it's going to pull all of your banking transactions. Once it pulls those transactions, your job in this step is to review those transactions and make sure that you are clicking what category they should be tracked to in your accounting system. So for instance, if in your transactions you see a gas station deduction or a gas station expense, you're going to go in, review that, see the gas station, and actually categorize it by putting it in the category of travel, for instance. And you're going to go through all of those transactions and do that. That's another reason why doing it every month is so important, because if you do have large number of transactions, if you wait, it's going to be extremely overwhelming to try to do that once every couple months or once a quarter. But for me, I like to do it monthly. It makes it a manageable task. I can go through all of the transactions, review every single one of them, and then put them in their appropriate categories. Now, when you've got QuickBooks, those categories are going to be held in the section of QuickBooks called your chart of accounts. And that is where all of your expense accounts, all of your income accounts, all of your liability accounts, and all of your assets accounts will be created for you. You can customize them for your business. So if you've got marketing expenses and you specifically want to see Facebook marketing, you'll have a chart of accounts that says Facebook marketing. When it pulls your transactions and you are actually reviewing and categorizing them, you'll see Facebook as a charge in that business account, because remember, you've swiped that business card, and you'll be able to pull the drop down box and mark it and categorize it into that Facebook marketing category. So that's what I mean when I say log in, review, and categorize. And step number 3, go into that same financial software and reconcile it against your bank statement. Now, reconciliation against your bank statement is something that if you were old school like me, you've got experience doing, because back in the day, we had physical checkbooks. And in the front of those checkbooks, if y'all remember, and I might be aging myself, some of y'all, I know my audience, so some of y'all have no idea what the heck I'm talking about. But back in the day, if you had a checkbook, in the front, it was like a checkbook register, and it had like all these lines on it, and it had like debits and credits. And when you wrote a check, you would actually fill out this register and put what the check was. And then every month, when my mom or my grandma or me would balance your checkbook, we would pull out that checkbook, we would open up our bank statement, which back in the day they would mail to you, so you'd have to wait to get it into into the mail. And you would actually pull out your bank statement and that checkbook and make sure that what you wrote in your checkbook matched what was showing on your bank statement. At the end, the balance that's in your bank and the balance that was in the checking account and your checkbook should actually match each other. And that way you would be able to see if there was anything weird going on or if anything was missed. This is the exact same concept. When you reconcile your business bank, you're going to log back into that same software, and in QuickBooks specifically, there is a section that says Reconcile. You're going to open that up and you're going to compare it against your most recent bank statement. So if in June I'm actually working on May, I'm going to pull my May bank statement, I'm going to go through it, and I'm going to actually reconcile and make sure that the transactions that are on my bank statement are also reflective in QuickBooks. That's how I'm going to reconcile. And at the end, the balances should be the same. It's so important to do that because that way you aren't missing transactions, or you don't miss that someone actually spent some money that you don't have a record of or you have no idea of. So that's the actual reconciliation piece. And a lot of people assume when I said review and categorize that means the same thing as reconciliation. But in reality, in your financial processes, you've got to do both. You've got to put all of your transactions into specific categories so that your P&Ls reflect what you're spending money on and your budgets get updated and you know what's going out of your business and what's coming in. But then in the end, you also have to do that old school method of pulling out that bank statement and comparing it to what's actually in your software and making sure that you can account for everything and you don't miss it. Now, all of these steps are dependent upon you having a financial structure, a solid one, set up in your business. So you definitely need to get all of that together if you don't. But if you do, go ahead and get to know your money intimately. You got this. I hope today's video has been helpful for all of you out there that have been asking me this question. I hope they answered those questions for you. And if so, or if not, tell me in the comments below, and like this video for me, but only if you do. Share it with someone who needs to hear this stuff and is completely stressed about what reconciliation is, and check out all of the detailed videos in the How to Set Up Your Business for Success in 2021 series. Hit that subscribe button, my love, and click that bell so that you will be notified when episode 9 of the series goes live in a couple of weeks. And until next time, my love, I will see you soon. Have a wonderful day. Bye-bye. Mwah!